If you are just joining us, it was a major sell-off on Wall Street. The Dow, S&P 500, and NASDAQ tumbling today on fears over spiking COVID cases gripping Wall Street. Let's bring in Jonathan Golub, Chief U.S. Equity Strategist at Credit Suisse. Jonathan, great to have you with us.
Hi, Melissa.
Hi. You think a perfect storm is coming. This all has to do with COVID getting worse. What do you foresee?
I mean, well, if you take a look at what's going on in the U.S., we've gone from 25,000 cases a day to 75,000 in the last 2 months, so a tripling of cases. And we have to remember that this is before we started to all gather for Thanksgiving and Christmas. This is before the weather is getting colder and daylight savings time, so it's getting darker, harder for us to gather outside, so we're going to be forced inside, which is going to push caseloads higher. Now, if this was by itself, it may not be a problem, but it's now quite clear that not only won't we have a fiscal deal to bail out small companies and unemployed folks before Election Day, we're not going to get this until after Inauguration Day, and so the checks are not going to be available to support those small business owners until February or maybe even March. And that means is if we see some real economic hit here, the safety net has been taken away. Now, I'm not saying that all of this is going to play out in a worst case, because I don't think it will, but what it does mean is in the near term, the risk is to the downside. Today was all about this. Today was Europe is acknowledging that their numbers are really picking up much more than the U.S., and they needed to take actions which aren't as bad as what we saw in March or April, but they were directionally in that, in that direction, and that really spooked the market, and rightfully so.
In terms of what is going on in Europe, Jonathan, let's just suppose that here in the United States things are steady Eddie at this point in terms of the increases in cases and in positivity rates, et cetera. Could the hit from Europe, the impact on U.S. companies selling to Europe, could that impact what we're seeing here in the U.S. in terms of our economic recovery?
Sure. I mean, first of all, if everything, I don't think that we're going to have this huge dichotomy between everything is perfectly fine in the U.S. and things are rougher in Europe. But if you look at part of the reason we've had this cyclical success over the last couple of months, and you see the 10-year bond yield having risen, a sign of more demand for capital, it was because we were seeing better numbers out of China, and it was a knock-on effect. And if you take all of Europe combined, much more important to us economically than China alone.
There is this belief, though, Jonathan, that the Fed will be there, that the Fed will somehow save us, will make things better, even because of the lack of fiscal stimulus. Do you believe that?
When people ask me the question, I ask them, let's assume you're a small business and you can't pay your bills. And you have to go bankrupt. How important will it be that the Fed's going to buy another $100 billion worth of 10-year treasuries? And the person always looks at me and be like, I wouldn't care. If I can't pay my bills, I can't pay my bills. So there's a role for the Fed to play to make sure that companies, and can borrow, and that the banking system is healthy, and that's worked really well. But without that support for small business and that guy who may lose his job, the Fed's actions are really going to have very little impact in the near term. Longer term may be different.
Jonathan, thanks so much for joining us. Quick question. You mentioned the small business, and I think one of the things that we want to touch upon is the market versus the economy. What will it take for that small and medium business enterprise to get that uplift? Do you think perhaps less bipartisan fighting, or I'm not going to put words in your mouth. What do you think it will take for that section of the economy to see the uplift that we've seen in some of the more publicly traded companies?
All right, let me spin your question a slightly different way, which is why is it that big companies have been able to hold on where the small business guy has just had a much tougher time? If we think about the things that have happened in our personal lives, we can't go to the gym, so maybe you buy a Peloton. You're stuck at home, so you're buying a laptop because you have to work from home. You're going and fixing up your garden, and you go to a home improvement store like a Home Depot to buy things. All of those kind of names are really big cap names. And so if you then say, well, who's been hurt? the local dry cleaner, the car wash, your local restaurant. And so it's somewhat random and somewhat unfortunate that this bifurcation is not about what is the Fed doing and the like. It really is that the basket of companies. Now, if you look outside of the U.S., they don't have the same benefit. Those big companies I mentioned, not only are they, public companies, big companies, but they're also almost exclusively American companies. And so this is not the pain is not being spread around equally and fairly, and large cap, growth-oriented U.S. companies have just been on the right side of this trade.
Yep. Jonathan, great to speak with you. Thank you. Jonathan
Pleasure.
Gall of Credit Suisse. I think that there are a couple of interesting things, Karen, that jumped out at me at least. Jonathan basically made the case for large cap companies like a Home Depot, et cetera, that are on this right side of the trade. And the notion that the Fed can't solve a solvency issue. They can help with a liquidity issue. But when it comes to Main Street and the jobs that Main Street produces and holds, it can't help it if that restaurant's going to go belly up. The Fed just won't be there.
Right. They can't access, that small business can't access the credit markets like a Home Depot, who doesn't need the money but could access a lot of money almost instantaneously. So that's an excellent point. It makes me wonder, can we see a more targeted stimulus that would have bipartisan support and leave the rest for later? I would think that politicians from each side of the aisle are going to be under tremendous pressure from their constituents to get something done to help small business.
The shame of the sell-off, Tim, if I may go in this direction, is that it didn't happen earlier. Maybe this would actually incent people in Congress to come up with a deal, to make some concessions and get some help on the way to the American people.
Yeah, I mean, look, they didn't hear the SOS, not to quote another Abbott tune, but if you think about the stakes at hand in Washington, and the winner taking it all is something that it seems to be the most important thing. As far as I'm concerned, the dynamic for markets right now is you did have a number of companies that pulled forward a lot of earnings. You had companies like Best Buy, you had companies like Apple that were also great, very much beneficiaries of the first round of stimulus. And the question is, when is that next stimulus coming? And are the companies that have already been, winner takes it all, somebody that can do something in round two? So I think the markets need to wait and see. And right now, I don't see markets getting away from us to the upside.
Shepard Smith here. Thanks for watching CNBC on YouTube.